My name is Sue Shipe-Giles, and I'm an Adult Services Librarian here at Bexley Public Library. Tonight, we are having a program on financial wellness. Smart financial habits will be discussed. Our speaker is Saha Saadati. She works at the Grove City location of U.S. Bank, and she will be discussing financial wellness and how to build a prosperous future. Topics to be discussed are savings, budgeting, fraud protection, fraud prevention, credit management, and more. Now I'm going to turn this over to Saha. Thank you.
Well, thank you so much, Sue. All right. Well, hello everybody. I'm gonna start with letting you know a little bit about myself. My name is Saha, and I've been working for U.S. Bank for a little bit shy of 8 years. I've been, for the past 2 years, I've been a branch manager. I've been at a few different locations, and recently I started my program for my master's, and I transferred to the Grove City location. So I was here at the Bexley down the road with the local community, and then because of my studies I made a transfer to another location. But at the end of this presentation there would be a QR code that in case that anybody would need to have any further conversations or any discussions, any questions, I would be more than happy to discuss it and set an appointment that way. So to start, I want to talk about financial habits. I kind of want to put the focus on the word habits because it's more about having the conversations and creating that habit, because the informations are just information. When someone receives them, then retaining them, and then if it's not a habit, then it's going to be forgotten within a few days or within a few weeks. So everything that I'm going to be discussing today, I will go ahead and talk about it in more of a behavioral aspect and more of a habit creating pathway. So the topics that we're going to go over today is going to be savings, budgeting, credit, which is very, very important. I will probably spend a little bit more time on the credit aspect of it. Debt management, fraud and security, and some prevention from those fraud and scams that are going on right now in the digital era that we're living. So that all being said, I am going to assume that I'm talking with a very wide variety of audience. So some of the explanations that I will be giving are going to be more on the basic and very, very straightforward basic information. And then I will go a little bit more in depth. I won't really go in depth with any of these topics to give all the details of it. But again, as I said, I'm available that if anybody would have any questions or if there would be any further discussions or need, I will be more than happy to provide that as well. So again, as I said, the backbone of everything that I'm going to be going over tonight is going to be based on creating some habits. And we all know what habits are, but most important part of it is that it's going to be recurrent, and usually they become unconscious after some time. So you need to make some conscious choices, make some structural changes, and then when you do that, the good news is that it becomes like washing your teeth or brushing it or doing the flossing at night. It just comes naturally after sometimes. So to build the smart financial habits, and this is going to basically be the full conversation that I'm going to have tonight, it's going to be saving for a rainy day, then managing your budget, knowing about your credit, or reducing the debt, because that's very, very important, and then track your online security, so knowing that you're not going to be a victim of a fraud. So this is going to be basically the backbone of all of the stuff that I'm going to be explaining tonight in a one summary before we get in depth with all of the topics that we have tonight. So Well, that's very, very important before we get into any of the financial aspects and the financial conversations. It's going to be, well, what's the goal? What's the purpose of having this conversation at all? Why do we want to do the things that we're trying to do? Well, sometimes identifying the goal is going to be a very easy thing because life kind of has chosen that for us. Let's assume a college, recently graduate or close to graduate. Well, finding a job, knowing how to budget out of a school, potentially buying a house. Well, those are going to be the goals. The life is already making that path. It's really not that hard to guess what the goal would be. If the car has broken down and well, we all need to go to work, so then we know what the goal is going to be, purchasing a car. But sometimes it's really not that simple to figure that goal out. It might be because that things are way too complicated, or it might be because that everything is actually having a good structure. And when that is the case, the goal finding is going to be a little bit more important and hidden because there are a lot of different ways or angles that things could go to. And because of that, it's a little bit difficult to set those goals that we want to set up. So throughout this whole conversation, I'm going to assume different scenarios. I'm going to give, like for example, a person which is in X, Y, and Z scenario, and help with this goal setting aspect as well. Because I think that if we stick to the goal that we're having and know the why behind the actions that we're having, then creating those habits are going to be easier for us because there's a meaning behind that. So let's get into budgeting. So what's a budget? Well, pretty simple. Everybody probably has heard it, but it's kind of like an estimate. It's a plan. It's a guess. It's a, okay, what comes in, what goes out. Pretty straightforward. So let's get a little bit deeper in that conversation and realize that, okay, what's the right way of budgeting? So no-brainer. This is pretty simple. Probably a lot of people have already gone that far and know how to do the budgeting. As simple as says it in here. But you identify the monthly income, so we know that how much is coming in, and then we're going to determine that what are the expenses, and I'm going to get a little bit deeper in that area, and then you would save for a rainy day fund, and then time to tally. So let's talk about the monthly expenses. I like to get a little bit deeper in that because I firmly believe that finances, 50% of it is the money that comes in, but then the other 50% is the money that goes out. And while we sometimes don't have enough control over the money that is coming to us, we have a lot of ways that we can control how the money is going out. So what I would recommend on that part of it is that breaking down the expenses into two categories of fixed expenses and variable expenses. The fixed are going to be things like rent, like mortgage, like any subscriptions, insurance, internet, things like that, that month to month is not going to be different. It's going to be the same dollar amount, and having a list for all of those. Well, those are going to be the fixed ones. And then the variable ones, breaking that into two categories on its own, and have the necessities, an average of it, like for example, utilities or food or gas for the car. Those are going to be some necessity, categories of expenses. Having all of those, and then have an average dedicated to each category, and then having another category for all the other things. So like, for example, eating out or travel or things in that nature. So the fixed expenses and the necessities, if you combine those two, that is going to be the amount of money that is necessary for living. So if you break it down like that, it is going to give you a little bit of a bigger picture that you need to know that where is your money leaking if it is leaking in one particular area. And that's, in my opinion, the power of budgeting. Because again, as I said, the money coming in, usually that's a set amount of money. For a lot of people, it might be different for different individuals, of course, but for the majority of the people, money coming in, it's a set like a number. But then the money going out, we do have a lot of say because we're choosing that where the money is going to go to. So one thing that is very important is that like we distinguish between the needs and the wants. The needs are the necessities like the shelter, food, water, no brainer, and the wants they're not any less important than the needs. I don't like to have that mentality that we should not have any wants and we should always care about the needs. Yes, the needs are the priority, but they're just the priority. It means that after the priority is taken care of, then it's time to realize that what are all those wants, and then based on those wants, we actually can have goals. And as I said, the goals are very important because without them, it's really hard to stick to the habits because then it's just a task that we don't know why we're doing it. So, these are some tips for some mindful spending. I kind of want, like, I wish that this one was like up here, because I think that this is the backbone of it. Evaluate what's important to you. Because when we know what is important, then we will be able to prioritize it. But then track your spending. There are a lot of different apps in there that allows you to track your spending. Try not to have the one-click buying. Try to plan ahead. Have a little bit of a pause, like set some time, like, you know, say that, hey, I added all into my cart, but I won't buy it unless if it's 30 minutes, like, you know, within the 30 minutes, I'm not gonna purchase it, basically. So then you can have a little bit of a time between the time that you're deciding and the time that you're actually putting that decision into action. But these are some mindful practice around spending, so then you will be able to have a little bit more control over where you're spending your money. And then because we talked about the habit, I wanted to emphasize on this that put your focus on the positive. It's way more important that you create the right habits than to not make any mistakes. So if you don't put your focus on the positive things and celebrating the small steps that you are actually winning, and you're always just criticizing the times that you are not following the budget that you're having, well, then it's going to become really, really hard to create those habits. And if it doesn't become that, then it's a little bit harder based on the experience that I had with a lot of people, like probably thousands of people within the past 8 years that I've been helping a lot of different people with a lot of different backgrounds. If the morale isn't there, then it's a little harder to keep going and like, you know, staying with the budget. So make sure that you celebrate the positive and give yourself grace if you don't stick to it. I really also like that quote because sometimes people think like that if they have enough, like, you know, enough money, or if they're on the wealthier, like, you know, spectrum, then there's no budgeting needed. But I really think that the budgeting is important for everybody, regardless of what's the financial status and what's the, like, you know, basically what's the lifestyle that they're having. It is important. So there are a lot of different tools. Well, US Bank also, because I work for US Bank, I'm very familiar with the tools that we have available. That being said, there is the app that we have, and it has a lot of cool tools on it. But there are also a lot of other tools out there that anybody would be able to use to help them with the budgeting. I'm not gonna get any more in depth with this topic. I'm just gonna move on to the saving aspect. But if anybody needed anything, again, as I said at the end of it, I'm gonna have a QR code, and then you're more than welcome to send me and set an appointment up, and I'll be more than happy to help out. All right, well, we talked about budgeting, so now we're gonna assume that the person is already all about creating positive habits and they know what they want and they got the budgeting down. So that's the assumption that I'm going to have from this point on, and then little by little I'm going to give different scenarios or different life circumstances that I've seen from my customers, myself, friends, family. I'm going to bring different scenarios that I can think of, and then we move forward. So the very basic topic of it, well, savings account, having money markets, CDs, all these different ways that you would be able to put the money aside, which is going to be safer than the money that we're keeping in our checking account. The checking account is exposed to the world outside through a debit card, through making payments, potentially writing checks, even though that it becomes less and less, which is actually a very good thing. It is exposed to the world outside. So savings accounts are very good for having that extra security of not being exposed to the outside world. And there are a lot of different ways that you can go about it, and these are three of them. So back to that same habit topic. So it's important to create some saving habits. Everything when it comes to the finances, and we're talking about people, the behavioral aspect of it is very, very important. So as we're going through the information that I'm providing, if you need to make notes, if you need to write any part of it down, that's perfect. But make sure that you little by little create that habit for yourself and build that accountability. And there are a lot of different ways that you can go about savings, which I'm gonna go a little bit more in depth with them. But you can go ahead and create a habit that you put a fraction of your money directly deposited into your savings account, or you can have some kind of an accountability partner that you talk to, and you have them ask you questions about it, or you would be able to having that vision, let's say that you want to, for example, buy that house that you want or buy the car that you want. Well, put that picture up there and look at it, and then that would make you stay more loyal to the goal that you're having, because you're gonna see it, and then the next time that you want to eat out but then you don't, you celebrate yourself because you realize that, okay, well, I got one step closer to the goal that I had. So don't underestimate the power of creating habits. And in each section, I have actually put some information about how to create the habits, because beside the information that I'm giving, I think that part of it is also very important. So let's get a little bit deeper with the topic of the rainy day fund. So rainy day fund, it's a little bit bigger umbrella than an emergency fund would be. So to put it into perspective, an emergency fund is a rainy day fund, but the rainy day fund might not be an emergency fund. And the reason why is that we also need to be able to spend money freely for the unexpected that come our way without feeling guilty about it. So why is that important? Because if it's an emergency fund, well, then it needs to be spent on an emergency topic. But then if a friend's wedding came up, or I don't know, eclipse is gonna happen, and we want to go on a mini travel because of it, well, then there should be some fund available within the budget that you will be able to tap into. And that is the rainy day fund. So I like to distinguish between the emergency fund and the rainy day fund, because I think that it is important to have that mentality. Now, don't get me wrong, I'm not saying that an emergency fund is not a thing, or you shouldn't have emergency fund. I think that everybody should. But I think that needs to be also under the umbrella of the rainy day fund. If you want to keep them separate, which I personally do keep them separate, that's okay. But then to not have the rainy day fund and calling it emergency, it creates that sense of guilt. And then we feel ashamed that if we needed to tap into it. And well, life is too short for being embarrassed all the time for the things that we're doing. So that's why that I kind of wanted to make sure that I explain that difference, and telling you that, okay, well, flexibility and adaptability is also a part of life, and then we need to have some room for that as well. So I'd like to go back on that goal topic one more time. Reason why is because that it's going to be very relevant to the savings topic as well. And I'm going to give a few different examples. Okay, so let's think that someone is in their 60s and they are getting ready within, like, the next few years they want to retire. Well, the goal setting and the timeline that we have available for that person is going to be very different than a recently graduated person or the parent that are expecting a child. So whatever circumstances that you're in, it's okay. It's important that you know that, okay, what kind of a timeline do I have? Because if we have the right timeline, and then we will be able to budget according to that timeline that we have, and have better results coming out of it. So the comfort of the risk is a very important topic. It's way more important than a lot of people actually think about, because the risk that a recent graduate or someone in their 30s or their 40s would be able to tolerate is going to be different than a risk that someone that is close to the retirement can tolerate. And well, then the type of budgeting and the type of planning for the savings and things in that nature are also going to be different as well. Now, what I always recommend is that have some people, professionals, and this is more than just the financial advising, because like some people are going to be like, well, I don't make that much money to go to a financial advisor, so well, then what about me? If you are in a good relationship with any of your local banks, and obviously again, because I work for US Bank, I can talk on behalf of our bank, you still can come to the bank and we can have conversations. And I do recommend about once a year conversation appointments to be set up for everybody to go ahead and evaluate their finances, evaluate the kind of life circumstances that they're in, which it can change at any moment depending on where we are in our life, and then we will be able to give some advice. Now, if someone has a financial advisor, that's awesome. But again, the banking is a little bit different. So the things that the financial advisor can do and the benefit that they can bring to the table, it's phenomenal. But the banking on its own and the savings and the day-to-day, those are also having a very big impact on your finances, more than a lot of people actually realize. So take advantage of resources available to you, basically. Okay, well, I kind of went in depth with this topic on the previous slide, so I'm not going to stay too long on this one. But again, as I said, you can have different kinds of accounts for different kind of purposes. But the best way to go about it is to discuss with someone, get their opinion on it too, see what kind of suggestion they would be able to provide you, and then make your decision that way. Okay. Now on this particular slide, I kept this one particularly because of this: I can't afford to save, or I can't save until my debt is paid off. That's really truly not the case, and it is very important to understand that in order to save, you don't need to be debt free. And it is also very important to realize that if you're not making a lot of money, it doesn't mean that you cannot save. It is possible. I've helped a lot of people in a lot of different life circumstances to actually end up saving and have a rainy day fund, even though that there was also a lot of other things going on the background of that. And it's actually very important, because if that ends up happening, if that rainy day fund is there, it actually takes the pressure off of that paying off the debt, which is going to be the next topic that I talk about. But truly, don't think that you only are able to save money, or you're only allowed to save money if you have paid all your debt off, or if you're not making a lot of money and you're like, okay, well, I mean, all that I'm making is going every month. Just have a conversation with us. We'll be more than happy to help out. Okay. Okay. Let's talk credit. One of the most important topics, and one of my favorite topics, because I think like that if I would be able to communicate some good information regarding the credit, then that's actually going to be really, really helpful for a lot of people. So before I jump into anything else, I want to mention that why is credit important? Why is it that we even have a credit system? Well, budgeting is awesome. Rainy day fund is phenomenal. We just talked about how important it is, and I spend a good chunk of time and energy into, convincing everybody that it's a very, very good thing to have. But chances are that we're not gonna have enough money saved up in our savings account and our rainy day fund to go ahead and just purchase a house, or potentially just purchase a car. And then when those circumstances arise, then that basically means that we need to borrow money. And then when we need to borrow money, credit is important. So credit is money back into pocket. Credit means that if you are a credible borrower, then you're going to be able to have better rates offered to us. It also means that you're going to be able to leverage and make more happen through our life, and within the scope of our financial resources that we have, we would be able to accomplish more through having access to the credit and the capital market. So that's why that is very, very important that regardless of where your understanding is about the credit, there's always a little bit more that everybody can learn. I learn something about credit every few months. There's something else that comes out, and I'm like, oh, I did not know that. And it's always good to stay up to date with the credit and know exactly how everything is. So I'm actually gonna try to spend a good chunk of time, because renting, employment, relationship, you name it, it's going to have an impact on it. So now that we understood the why, let's talk about the what. What the credit even is. Well, the credit is an algorithm. It is a number that is associated with everybody's life circumstances, that a few different topics are going to have an impact on it. And then the credit numbers are going to go from 300 to all the way 850. And then as we see, the very poor, fair, good, very good, and exceptional. So as we talked, it's a number, but I want to kind of get deep with these parts, like the bullet points that we have in here, because if you have a good understanding of how does the algorithm of it works, then you would be able to put yourself at the right angle to that algorithm, and then that means that you're going to be a good borrower that is eventually able to go ahead and have more access to the capital market. Ultimately, buying houses, buying cars, starting businesses, and things in that nature. So, very important parts of that is going to be the payment history. So even if you are not able to make the full payment, please, please, please make your minimum payments. Because if you don't make the minimum payment, it's going to actually harm it, and it's going to take quite some time before you can recover from that harm. It's not impossible. Don't get discouraged if you are in a situation that you have missed payment before. There are places that they would help with that, but the payment history is very, very important. Now, the outstanding debt, it basically, if I want to break it down, is the amount of limit that is available to you. Let's call that, for example, $10,000 on a credit card. the outstanding that is going to be the percentage that you have used of that credit card compared to the amount that is available to you. So if you have spent $1,000 out of that $10,000 limit, well, you are at 10%. Well, you're doing a good job. So the higher that percentage goes, the worse this impact would be. So a very good rule of thumb that generally speaking a lot of people talk about is staying below the 30%. That's utilization, my bad. So that is the utilization, and then the outstanding debt is going to be basically the big pie that you have. So like the utilization is what I just explained on that one credit card, what's the percentage, and then the outstanding debt is going to be that, okay, well, let's call it like, me as an individual. If I have a mortgage and then I have an auto loan and then I also have student loan, well, then that's going to be the full picture of the whole thing that I owe compared to the things that I own. So that's going to be the percentage of my outstanding debt, and then the lower that number, the better, but it doesn't mean that if it's zero, it's the best. It needs to be relevant to who I am and in what life circumstances I'm in, and is it does it make sense for who I am and where I am in life? So like for example, if a recently graduated person has a lot of outstanding debt because they have their student loans and then they have like their mortgage and things like that, and they recently obtained all of this stuff, well, that makes sense because they also are going to be working for a long period of time and then they're going to pay that down. So as time goes on, then that number is going to also come down. So these three are very, very important, and then the inquiries are very important because you don't want to have a lot of different places to like check your credit within a short period of time, because that would actually harm you. Now, one tool is not a harm. I don't want you to think like that every time that you're applying for a credit card, it's a disaster. The credit score is gonna go very, very low. That's really not the case. You just don't want to have too many in a very short period of time. And then the credit type and the history of the credit type, again, as I explained it, the loans, if they don't have anything to back them up, like let's say student loan, though it really doesn't have anything to back it up. If it's a personal loan, it doesn't really have anything to back it up. But then if it's a mortgage, well, it has a house that is backing it up. If it's a car, there is a collateral that the loan is based off of. So those are all gonna have an impact on it too, okay? So there are a lot of different ways that you can check your credit score. All the bank apps, including our app, also provide that number to you. Something to remember is that all those numbers are just guesstimates. They are not the actual credit score that you have. They guess at what it would be. But it's a very, very good habit to check that number, because you want to make sure that that number is in check and you're actually staying within the range that you are supposed to be. But one very, very important thing is that ask for your actual credit report once a year. From the three agencies that we have, the TransUnion, Equifax, and Experian, you are allowed to have one free report requested every year, and I do recommend that everybody would go ahead and request that letter to be sent to them, so you can go through everything. You can see all the information that is on there and evaluate that where things are, and then if it needs any improvement, you can improve upon it. If you need to use it in order to get to your next goal, well, then you can tap into it and actually get the credit in order to move to your next step, whatever that might be. We talked about that too, and so this is also another one that I wanted to spend a few moments talk about it. The things that actually have an impact on it are these stuff. Late payments are really, really not good. So I emphasize one more time, please make sure that at least the minimum payments are paid every month. Getting close to your credit limit, that's that utilization that I explained. You don't want to have a big utilization compared to the limit that is available to you. Closing your oldest account because there is a history of how long you've been a borrower and then what kind of a borrower you were. And then if that history is not there, then that is not to your advantage. So make sure that those older the older accounts that you have, use them at least once every 6 months, once every year, so then you ensure that those cards don't end up getting closed out on you. And then anything that would go to collection that would actually harm you. Now that also means that if you pay anything that is in collection, that would have a positive impact on you. Child support orders, and then the credit applications, which is the inquiries that I just talked about. Now the things that are not going to have an impact on your credit score is going to be checking it. Now the checking it, we're not talking about the inquiry, we're talking about the monthly recommendation that they gave you to use some of those apps and I'm on the more conservative end. I would say that use your bank apps to check the credit scores. The majority of them are offering that. We certainly are offering that. Your debit cards, cash transactions, overdrafts, the non-bank loans, now important, don't let it go to collections, because if it does, then it does have an impact on your credit score. And then parking tickets. So if those stuff happens, obviously it's not the best thing that has happened, but it also is not going to have an impact on your credit score. So rest assured that those stuff are going to be all okay. Now you need to take care of it, but it's not the end of the world. Okay, now that we talked about that, let's talk about so let's have a little bit of review, because this is almost like midway. So the stuff that we talked about is the budgeting. So we talked about important, that what comes in, what goes out, and how it goes out. And then we talked about the savings, the importance of it, the difference of the different kinds of mentalities that you can have around the savings. And then we also talked about the credit. Now, those are all hand in hand to bring us to debt management. So remember the different scenarios that I was giving you. So at this point, we're going to assume someone in their mid ages, let's say in their mid 30s to mid 40s. Okay, chances are that the person in that range of age has already accumulated some debt. So in the society that we're living in, education is expensive, living is expensive. Chances are that we have to tap into our credit and get some debt going on. Well, now if there are also some credit card debt going on in addition to all of those, then now things might look a little bit more complicated. So now there is a book in front of us that is having all these different topics and different reasons why we needed to get all these loans or the credit cards out, and then now we have a list of them. So how do we want to go about paying those off? Because now probably our credit score that we worked hard on bringing it up, with the amount of debt that we had, remember that we talked about the outstanding debt compared to the to the things that we own. Well, that's probably not looking as bright right at this stage of life. Is it the end of the world? Definitely not, because there are different ways that we can go ahead with tackling the debt. So there are two very, very common and good methods that we can go about them. The avalanche method and the snowball method. Okay, so it's going to be a little bit of a different circumstances that each one of those scenarios would be put in place, and it will be beneficial. If you have a lot of you have a lot of debt, and then you have them in a lot of different accounts, then probably the snowball would be something that if I was in that situation, I would probably go with. But if you have a few items and they're all bigger, well, then I will probably go with the avalanche method. So what's the difference between the two? Let me see that if this one has it. No, it doesn't. All right. Well, so with the first one, what we are gonna benefit out of is going to be paying it faster with paying less interest, because we're gonna focus on the credits that they have a higher interest rate, that you're getting charged a higher interest rate. The majority of the focus is going to be put on those ones, and then with the snowball second one, we are going to put our focus on the smaller dollar amount. So let's say that, like, for example, if you have 8-9 different credit cards, and then there are some of them that have like $500, $700, $1,000, and then there's another one that has like $5,000, and then there's another one that has like $7,000 on it. Well, if you go with the smallest one and you pay that one off, and then you move on to the next one, it frees up that money that you were paying to the previous one, and then you would snowball it into the next one, and then you move on, like, the next one, the next one, the next one, and then you actually see items paid off. Now, one very, very good advantage of this one, I do like this one a little bit better, is that at some point the credit score comes up to a certain level that you would actually be able to help consolidating the rest of it, and then usually at that point there's a better interest rate, and then it's already gonna do what this one is trying to help with. So it kind of is like killing two birds with one stone. So it doesn't mean that this is not a good method by any means, but usually I'm a bigger fan of this way, unless if there is a reason to stick to that one, which there are some circumstances. So back to the topic of habit, again, the same theme as I had. These are some advice on how to make this a habit. So we can have a friction of the money going to those stuff automatically. And then at least the minimum payment. So then that way you know that the credit is not hurt. Because if you have a good credit score, even if the debt to income, which is the amount of money that is going to the debt, is not covering you right at the minute, then eventually when it gets better, then you will be able to help with the rest of it. Schedule paydays, so like you know when those payments are gonna come, and like you would actually be more alarmed about them, so you have a better plan in place. And then now this is also important. Make sure that you have a conversation if you cannot afford your payment. Now that being said, I always like to mention this. Be careful about the kind of communications that you have. Because if you call and you are certain and you're gonna grab the phone and be like that, I want X, Y, and Z, well then the chances are that the person is gonna assume that you have already done your research and you know what you're doing. Oops. So you know what you're doing, and then they're gonna be like, okay, they'll just follow the thing that you asked them to do. So I usually recommend that just let the other person know that I am trying to know what my options are. Because if you ask that what your options are, and you know what those options are, well then you can choose among them, and before you actually pull the trigger and fall into it, or choose it, well you can get somebody else's advice on it too. So anytime that you need to make any phone calls, like you got to the tough life situation, it happens. If that happens, and you actually need to go ahead and make that call, it's okay. But just be careful about your communications, because the last thing that anybody wants is to be in that hard kind of life situation, and on top of that having these communications going on. That's not fun. I don't recommend that. So stick with asking about your options. And then this is giving some more advice again, see that what kind of a method do you want to go with, tackling that debt and getting rid of them, and some more suggestions there to go about it. Again, consider the debt consolidation, and talk to your bank for options. That's what I was talking about. So very, very important. If you I would say that if you want to make any notes, this section of the debt management and the credit had a lot of good good points to write them down, and if you have any questions, by all means don't hesitate, let me know. I'll be more than happy to help out. But if you need to know a little bit more about it, definitely get the notes and the points that I made in here, write them down, and then if you actually need to do more research about them, it would worth your time for sure. Okay, now I'm gonna change the gears altogether. We talked about all the financial aspects of stuff, all the things that I wanted to go with, the conversations that I had wasn't like the deepest conversations that I could have, but it was good. It was a very good general amount of information. So then you realize that, okay, in what area you need to receive more help, or you need to do more research about. But then now I'm going to change the gear and talk about the security. Okay. So, attackers are capitalizing on fear. What kind of fear? Fear of missing out, or real fear, like the fear that we call fear. Your child is going to go to jail if you don't send this money right away. This person is in the hospital and they are in ICU, and you need to send money right now. So they kind of go ahead and put urgency to the matter. Or, oh, if you don't get this right now, you're going to miss out on this awesome discount that we have. Or congratulations, you got this job, go ahead and do this right away, so we hire you right now. As we all know, that we're all going through a life, and life is not necessarily the easiest thing that we can do all the time. So sometimes we are excited or scared, or having too much anxiety going on, and then when someone comes and taps into that, well, then chances are that we're not going to be as alert when we're thinking about this stuff. So rule of thumb, if you are having too much of any kind of emotion, just wait. Don't decide. Just wait a second. Anybody that is going to be contacting from any financial offices or things like that, urgency is not a part of that. They would give you time. They want you to reach out to credible places. So don't give information right away over the phone, or emails, or clicking on the things. Literally, you can trigger the brain that if I have too much of any kind of emotion, well, I probably shouldn't be doing anything right now. I shouldn't be making that decision right now. That's the best way to prevent anything from happening. So now that all being said, I want to go over, I went over a few examples, but I want to kind of get more in depth with these. But these are the very common types of scam. Romance, tech support, cryptocurrency, employment offer, online purchase, family emergency, fake checks or money orders. This is a nightmare. Great apartment deals, scholarships and grants, student loan forgivenesses and change in payments, lottery scams, healthcare, telemarketing, charity. You see, in all of them, if you pay attention, there's some kind of an emotional response or emotional, expectation that they want out of you. So, all of these are tied with either a very, very good news or very, very bad news. So be careful whenever that you're going through any of those life circumstances and steps of life. So the phishing is actually still the #1 tactic for the cybersecurity and the cyber attacks. So emails. Don't click on links. Just try not to click on links. If there's any useful information on any of those emails, well, there is an app pretty much for everything. Well, go to your app that you have already set up and verify that information that way, particularly when it comes to your banking. If there is anything going on, if there is a reason why the bank wanted to send you an email, well, chances are that as soon as you get into the app, there's also going to be a notification about it. Or call your local branch and be like, hey, what's going on? I received this. Could you verify that for me? Just don't click on those links, because especially on computers, it's kind of like, hard to get rid of all the things that they put in the computer, and you probably need to go ahead and clean it all up, and it causes a lot of problems for you. So try to avoid any of clicking on any links, and the apps are going to be having the same information. These are again some types and some themes that they go with, and the strategies that you have. Now remember that we talked about the habits and creating the habits. If you create this recognize, react, and report, like your rule of thumb, and like in the back of your mind, that if something is going on, I need to recognize it, then react to it, then report it, and you make that a rule of thumb, then you actually are going to follow it. But if you're caught up in the moment, the chances are that you're not going to be thinking deeply about it. But make that not clicking on any of those links on the email a habit. Don't just click on it. I try my best not to ever click on anything directly from the email. I go to their website and I find a different way to do it so that I avoid doing that. But pretty straightforward. You need to recognize that you are actually going through getting scammed right then and there. And then when you recognize that, okay, this is what's going on, then you need to react to it. And then obviously you need to report it, so hopefully it doesn't happen to other people. So this is going to be how to spot the potential scam. The big important part of it is going to be that emotional association that they talked about. If it's associated with a lot of emotions and there's a lot of urgency going on, chances are that it's not okay. So doubt it. Put a question mark on it. Be skeptical about the different offers that they would give you. And then these are some very, very good do's and don'ts for protecting your information and protecting your identity. Have the passwords. I know you're living in this era that we have a zillion different email, different passwords, and who can memorize all of them? I feel ya, me too. But have some secure passwords, and at least I would say that if you have financial or whatever that is important, let's say that if you're if you're having some immigration stuff, or if you're having some student loan, or any finance aspects, or any health, those type of stuff, don't use that same password that you're using for those stuff, and also Amazon, or Target, or you name it, this game that whatever, Candy Crush that we're playing. Try to have separate passwords for those important ones, and then the ones that are not really that important, and they're more of a leisure type of a thing. This is actually, the second one is actually a very, very good habit. Try to check your balances every day. The statements is a different thing, but the balances, just have the habit once a day. Go take a look, see that, do you have the same amount of money that you had yesterday? If something has gone out, is it something that it was supposed to go out? And then if not, then obviously report it. Credit report we talked about, advisors we talked about. Try to have at least once a year, have a conversation with a banker, and then researching, securing the payments, and then obviously contact the bank if something is going on. And then the don'ts, don't click on the links directly sent to you. Don't share your personal information. That's another very, very good rule of thumb. If the bank is calling you, or if a credible place is calling you, chances are that they're not going to be asking for your personal information over the phone in a way that you're going to trust your guts. If you feel like that something is odd, chances are that it is odd. So just go with it, and don't give any personal information out as much as possible. If you don't know a place, if you don't know an organization, don't send them money. Just refuse sending money to anybody that you don't know. If you're not understanding it, well, ask more questions. Don't do it until you have a good understanding. And then, the people that you don't trust, the people that you don't know, just try to avoid all of those circumstances. And then the reporting is like, these are some information about like, if the identity going on, identity theft is going on. That's the website. Make sure that it's the .gov. That's very, very important. Don't .org, .com, those are stuff no good. .gov is the one that you want to go to, standing for the government. And then if you feel more comfortable, go to your local branches. If you have to call them, make sure that you are calling the right branch, and then have a conversation, and then we'll be more than happy to go ahead and help out. And then, this is again back to the topic that set up the alerts on your app. If you don't know how to, don't worry about it. We are here to help out. I promise you that all of these different institutions, again, because I work for US Bank, we are more than happy to spend time with you to set your alerts up and helping you out with those type of information rather than fixing the things. It's not a problem if it becomes to that point, but we do prefer to spend the time preventing stuff. So if you are not sure how to do that, don't worry about it. Just stop by or set an appointment, go to people and ask for help. There are plenty of people that are more than happy to help. And then make sure that you just know what's going on your accounts. And again, as I said, this is the end of this presentation. I hope that this was helpful, and you got some information out of it. That QR code is the QR code that you can set an appointment pretty much with any branch. So you would be able to put the zip code and set an appointment in different places that you are the closest location that is to your address. But I work at the Grove City location. Again, my name is Saha. If you needed to set an appointment with me, by all means, I'll be more than happy. It doesn't have to be in person. I can do it virtual. I can talk to you over the phone. So there are a lot of different options that I have to get connected with you and help you out if I need to. So that QR code, just go ahead, scan it, and then set your appointment, and we'll go from there. All right, well, you guys have a wonderful rest of your day. Thank you again for spending your time. And enjoy the evening. Bye.